Hello everyone, my name is Chris Titley and welcome to the FinTech Australia podcast. The FinTech Australia podcast takes listeners on a deep dive across the FinTech industry in Australia, focusing on the challenges, opportunities and big stories our community faces. Let's get to today's episode. Hi, it's Chris Titley here and welcome to the FinTech Australia podcast. I've got Daryn Griggs, Managing Director, Asia Pacific, APAC at Episode 6. Daryn, welcome to the studio.
Thanks, Chris. Thanks for having me today.
Now, today's topic, we're talking about progressive modernisation. And before we get into that, I'd just like to sort of touch on your background, Daryn, what Episode 6 is and your involvement with payments.
Yeah, sure. Well, I'll start personally. So I've been in payments for over 20 odd years. Previously worked for Visa, Visa in Singapore, Visa in Australia as well. Also had the opportunity to introduce the world's first multi-currency travel card into the market, which is with Commonwealth Bank back in 2008. So been in and around payments predominantly on the issuing side, so the actual card space. Since late 2000s.
Excellent. So, and Episode 6 is a local business, a global business. Tell us a little bit about that.
Yes, Episode 6, it's headquartered in Austin, Texas. We are global. We've got offices, obviously, US, UK, Europe, Japan, Hong Kong, Singapore and Australia. So we do what they call issuer processing, meaning fintechs or financial institutions that want to run a card program, Visa or MasterCard program, then they can use our technology and software and infrastructure to actually launch those products.
Yeah, right. So you're really powering fintechs behind the scenes. Not really a brand that most people would know out there.
That's
Episode
right.
6. But let's touch on the topic then. Progressive modernisation in banking and financial services. Just go back to the 101. Like what exactly is this, and how are you involved?
Yeah, well, if I go right back to the beginning, so cloud computing it's fairly new. It's only been around since sort of 2012 or 2011 type time frame. Yep. In fact, the first users of cloud native cloud infrastructure was Netflix and Uber, so they could take advantage of all the cloud benefits that actually come. So the Cloud Foundation was formed in 2015. So Episode 6 was founded in 2015. So we had the opportunity to leapfrog a lot of infrastructure and code specifically for the actual cloud. Now, what that did was that provided a lot of benefits, meaning that we could have infrastructure that is distributed throughout the world. So we run 8 different zones on Amazon Web Services, which means that they all run active. So if we have to do updates on our platform, typically what would happen with an actual another company, they'd have to bring the platform down. You'd have some downtime while they make those general maintenance changes and then bring it back up again. We don't need to do that because we're running active across 8 different zones. We can make a change on one zone while the other zones keep operating and keeps it moving. So it keeps the reliability and uptime much higher. So that's from I'm just sort of painting the picture from an actual cloud standpoint. Now. Yep. Every bank on the planet is looking to move to the actual cloud. I mean, they've got technology from the 60s, 70s, 80s and sort of beyond, right? So they know that there's massive advantages in moving from legacy into the cloud. But as they work through the process, they kind of get paralysis through analysis, where they look at the cost to migrate, to move. They look at the brand risk. They look at all these different things, and they just get stuck. Yep. So then you have this internal tension within the FI, that you've got the product guys and the business guys wanting to move to the cloud because they can see the benefits. They can innovate. They can actually innovate much faster. But then you've got the tech guys who don't necessarily have a lot of experience with the cloud and kind of get a little bit nervous, and then the risk guys and the finance guys because of cost. So we predominantly, as I said, sell to fintechs and FIs, and the bigger FIs. We noticed that there was this issue by actually being stuck. So we come up with a different way of doing things, and we're actually working with a large bank in Australia to actually do this. And that is, we're saying, look, don't lift and shift, don't move everything, don't move your whole card platform at once. Let's just pick one smaller product that doesn't have a lot of customers running on it, or let's pick a brand new product that we want to launch. And then the Episode 6 cloud platform will run alongside your current legacy platform while we put all the critical plumbing into your systems for your fraud, for your risk, for your data lakes, et cetera, et cetera. So we get all those pieces put in place. We start running alongside, and then they get comfortable with Episode 6. They get comfortable with operating in the cloud. They get comfortable with all those pieces. So it reduces cost, it reduces risk, it reduces all those sort of pieces. And then once they are ready, they can then move the next product to the cloud, and then the next product, and then the next product. So hence, we progressively modernise their actually stack.
And when it comes to the legacy systems, how many are there really in a bank? Let's call it a Big Four bank in Australia, in terms of the different types of products, the different types of legacy systems that a bank would use.
Hundreds,
right,
up to hundreds. Yeah, no, there is a lot, because again, if the code wasn't written sort of post 2012 or 2013, then it can't be cloud native. And if a bank takes their legacy system and just puts that into the cloud, that's not modernising. That's not taking advantage of the cloud native environment.
So the daunting part for the bank is we've got hundreds of systems and we just don't. It's just too hard.
Correct.
It's just too hard, right?
Let's
take one of those systems at a very micro level on a product that's not well seen, or maybe it's a new product, and let's test it. Now, when they do test it, what do they see in regards to operating on their own system plus the cloud? They can see what do they see in terms of difference?
Speed, for example. So speed, also uptime. The bank we're working with, they've had their particular system has had a fair few outages over periods of time. It's that's a kind of common thing with some of these legacy platforms. So I think speed, reliance, and cost, because operating the cloud is less manpower intensive and less technology intensive. So that means that there's cost savings to be had, rather than having dedicated teams operating dedicated servers in sort of data centers, etc. So.
And then when you look at the market here in Australia with the banks, and then you've got you're saying you're based in the US, then the banking market there, you've got hundreds of banks in the US, and so the opportunity for you to kind of progressively get to 100 systems onto the cloud times 300 banks times whatever, it's an enormous market is what I'm trying to say.
Yeah, correct. No, it is. And even in Australia, like with, banks, credit unions, so there's heaps of opportunity here to help these guys, again, save money, be more reliable, and actually innovate faster. So they're the three main benefits that actually come with actually moving to the cloud. So opportunity in Australia is massive, but you're right, the opportunity in the US and globally is crazy.
And the biggest challenges from a bank's point of view, as you mentioned, in terms of the just the overwhelming, daunting nature of changing all these systems. You mentioned things like security, and you mentioned things like speed and downtime, etc. I mean, these things people notice a lot more now, I'd imagine, and there is brand risk. And going on to that cyber topic, I mean, there must be a hot topic at the moment, and must be sort of maybe a negative for some of these banks to say, we just want to upgrade our systems. We don't want to think about the cloud. And so security, in the cloud, you've got Amazon behind you. Do you solely use Amazon? Is there, and in regards to their ability to be, at world class at a cyber level, that must be something which, customers are looking at.
Yeah, well, when you've got sort of the NSA and CIA and all those guys running on AWS, I guess they have to be pretty secure, definitely. But cyber is probably the biggest piece, because we do deploy our solution in a number of different models. We have a multi-tenanted E6 cloud that we manage, where we have multiple customers sitting on that solution. We also have a dedicated instance for bigger guys, where we will run that again in the Amazon Web Service Cloud. And then we have a model where we can actually license the actual software. So if a bank or an FI wanted to use a different cloud other than Amazon, we can certainly deploy that on other cloud environments also.
And then outside of banking, you mentioned FI. What other financial institutions would this progressive modernisation can do? I mean, obviously FinTech is one thing, and there's lenders and there's non-bank lenders, and I mean, is the market kind of endless, or are people already moved or built from cloud from day one?
No, we are focused on the FI and sort of FinTech industry ourselves. We're directly connected into actually Visa and MasterCard. So we have we can process those transactions on behalf of FIs and fintechs. But I do know that telcos are certainly going through the whole cloud space at the moment because they've got, again, all their technology
use cases
pretty legacy.
Into verticals, a bit like open banking and people talking about open energy and a few different things.
Exactly. The biggest, I won't say challenge, but one of the things that a lot of people have to get their head around is that a lot of these banks and others, they don't have the cloud skill set in-house, so there needs to be an education process on what that means operating in the cloud as opposed to actually legacy. The other piece is, as I said, because if your code hasn't been written post 2012, 2013, companies such as Episode Six are young. They're young companies, and when you're dealing with these 1,000-pound gorillas, dealing with young company, I'm sure the whole fintech community can relate to this, right? It's getting that credibility and also making them feel comfortable that you're going to be here for the actual long run and give them all that sort of comfort as well. So
when a company does migrate or portions of their company migrate, what sort of innovation and sort of the idea of building applications and new types of technology on the cloud is obviously a little bit hindered when they have their legacy system, but is that something which you think about and banks think about in terms of ongoing functionality and new features?
Yeah, and that's part of this lack of skill set, as I said, within some of these institutions means that a lot of times they don't know what they don't know. So it's part of our job to sort of educate them on what's actually possible. We are Episode 6 is an API-driven system, so we don't have any front end. So we're what they call headless. So we'll use our APIs to plug straight into mobile apps or internet banking portals, et cetera, et cetera. But we also can plug into third-party systems. So, and banks typically, if we're talking about or fintechs, will connect into one ledger, meaning one specific point where they can go and do an authorization for an actual transaction because that's holding the actual balance.
Yep.
What we're seeing with the cloud environment running across different zones is that we could go to multiple ledgers, and we've only got a certain time that we can respond back to a Visa or MasterCard transactions. It's actually milliseconds. And what we're able to do is to go in and out of multiple ledgers and still respond to a Visa or MasterCard. Now let me give you an actual use case where that might happen.
I like these use cases. Yeah.
Somebody might have a credit card, but they also have a savings account with the bank. And the credit limit might be $1,000. So they go into and they buy something that they've got $900 on their credit limit.
Yep.
They buy something for $200. So that means they've only got $100 left. Now, typically a bank would decline that transaction. They wouldn't let you go over that $1,000 unless you're a good customer, that they might. But what this scenario that I'm talking about, it would let you authorize $100 off the credit system, but then go, okay, there's still $100 left we need to authorise. We can then go back off to the core banking system to authorise the balance of the extra $100 and respond back to actually MasterCard or Visa saying with that $200
so it's a
transaction
debit and credit card combined in one.
It could be used both. So you could use both to settle those transactions.
And you still get your points. You still get your points on $100.
Correct. That's exactly it. Yes.
Yeah. Right. Okay. So you've spent a fair bit of your life in payments, and in regards to the trends that you've seen. Over the course of your career, what are you excited about in payments? Are you excited about those functionalities? But there's also other methods. I saw this QR code in Asia has obviously taken off, and in terms of paying with things. But it's evolved a lot in the last couple of years when cash is sort of on the way out.
Yeah, well, being in payments over 20 odd years, you'd think you'd start to pick up what's going on, but there's something new happening every day in payments. Like it's just ever evolving. It's crazy. It's just a crazy space to actually be in. It's a great space to be in because you're learning every single day.
Yep.
You're right. Which touched on the QR code. So we power HSBC's QR code payment system over in Hong Kong, and they're under a bit of threat from Alipay and WeChat Pay. So we helped them develop that solution. I can see more and more QR code systems coming to their fore. Now, who would have thought that all the billions of dollars that have been spent on this EMV chip or everything to sort of secure, and then this QR code technology comes along and sort of can provide pretty secure transactions as well on the back end. So
I was talking to someone recently about the intricacies of a payment. Like you go to your coffee shop and you tap and whatever. I mean, how many messages and things go on behind the scenes there in regards to, let's say, a single coffee transaction?
Yeah, there's a lot. Well, there'll be your scheme transaction, so your MasterCard or Visa transaction that'll come in that will go. it'll obviously go from the coffee shop's terminal to the coffee shop's bank.
Yep.
Then their bank will pass that message to actually MasterCard or Visa. MasterCard or Visa will then pass it to the actual cardholder's bank.
Yep.
And then that message could then be passed to someone like Episode 6 to check if there's enough money on that account to actually decline or authorise that transaction.
Yep.
So you can see there's a number of different hops there. And again, you've got to get that back, as I said earlier, in actually hundreds of actually milliseconds to make that transaction happen.
Yep.
And then behind the scenes, there's settlement and clearing and sort of moving money between all the banks to make sure everyone's made whole, and then all the way back to the merchant to make sure he gets paid.
And the local internet connection as well can affect a few things sometimes.
Yeah, absolutely. Well, internet or mobile data, it's just crazy how much we actually rely on that stuff. It's critical these days.
And the idea of like paying on your phone now, it's taken off. And the physical plastic cards becoming replaced by wooden cards and different other types of cards. Are you seeing that as a big trend that banks are looking at, saying, well, it's, our card issuance now is declining or whatever it might be? Yeah.
Well, we're working with 3 banks over in Europe, and the products we're launching with them do not have any plastic at all. They're running 100% off digital and wallets. So
digital wallets,
straight into Apple,
wow.
Straight into Apple's,
Yep.
straight into Google. They don't want a card anywhere actually near it. So yeah, I think that trend is going to continue to grow.
Yeah,
for sure.
right. And so QR, and you've got app digital wallets.
Yep.
What about the idea of paying with digital currencies?
Yes, we also support that. It's that digital currency is certainly going through its challenges at the moment, but I think the stronger ones will certainly survive.
Yep.
Some will become more transactional. Some are used for actually wealth fund building, but we do plug into exchanges as well, and we can have the ability to settle with digital currencies.
Yep.
But what we're seeing, more of a trend is on a credit card. So people are using an actual credit line to transact with, and then earning rewards in actually digital currencies.
Yep.
So that way you don't have to spend your actually balance of digital currency. You can just earn it.
Yeah,
well.
right.
So,
okay. And then there's a loyalty piece as well. There's like so much happening in payments, as you know. But Episode 6 right at the forefront. But Darryn, we might leave it there, mate. Thank you so much for coming on and having a chat about the progressive modernisation of core banking legacy systems and what's happening in terms of the idea of getting companies to the cloud to make it more efficient and faster, and also probably a whole lot more benefits. Really appreciate you coming in, and hope to see you at some FinTech Australia events either here in Brisbane or in Melbourne or Sydney.
Definitely, Chris. Thanks so much for having me on. Cheers.
Thanks for listening to the FinTech Australia podcast. I'm your host, Chris Titley. The FinTech Australia podcast is a collaboration between FinTech Australia and Sub11. For more information about membership options, news and the events coming up, jump on to the FinTech Australia website. Have a great day. Thanks for listening, and we'll catch you next time.